We see the bond trade here, Tom. We had a really rough start to the week. We've since bounced back a little bit, shooting above 113 here. There's a lot of mixed signals from the administration, and quite frankly, it appears that the tariff rollout has been an absolute disaster. The Customs and Border Patrol Agency has been releasing daily tariff quota information, and it looks like we're collecting around $250 million a day, which works out to a run rate of collecting under $20 billion per year, which is enough to finance the U.S. military for around 4 days, given how much money we spend. So there's clearly a lot of stress in the system right now, but volatility is not going back up. You've gone back and forth, and you said earlier this week on First Call that you'd like to get a shot at bonds under 113. Has that opportunity since passed, knowing that we still have all this tension in the system?
No, that's exactly what we did yesterday. We bought bonds at 113, a little bit lower, a little bit higher, right around 113. We just took some profits because they were, 113.20. So I just took some profits a few minutes ago. But that's exactly what we did. And, you can slice bonds up however you want. They're still trading in a range. I still think they have a floor here wrapped around, wherever they got to last time. I think it down to 110, maybe 111, 112 in that range is kind of like a floor that I see. So I kind of like them here at 113 as a trade. If they get in the 112s, I'll buy them again. And, just keep trying to scout. I just think they're range bound, and the risk is to the upside.
Mm-hmm.
I mean, there's
Tony,
there's a greater risk. The way I look at the whole political situation is there's a greater risk that there's a greater risk of bonds going up 5 or 7 points because Trump decides to tweet something or call something off than there is of the situation of bonds getting worse and going down 5 points. So I just like the pot odds here for bonds. I don't think they get to 108. I can easily see them getting to 118. That's just the way I look at them. So when I look at bonds, realistically, I think they have $2 of downside and $5 of upside. So that's why I'm long. That's it. No other reason.
Tony, there's a really, when we think about the long end of the curve, we can decompose it into 4 different parts: inflation, growth, the term premium, and, some portion of what the Federal Reserve is doing. So holding all else equal, we see that inflation expectations have come in. We've seen that growth expectations have come in. And the Fed is telling us they're on hold. So it's been this term premium, you need to be compensated more to hold this longer term debt because of the uncertainty. So the second it disappears out of the system, you're going to have the potential for this big short covering rally because we know growth is going to be pointed lower given, and the inflation expectations pointed lower given what we're seeing behind the scenes and the surveys and yada, yada. I think as long as we get these dips into the 110, 111, 112 area, the prudent thing to do right now is treat it as a floor. And it's also been a pain point for the administration, 4.5% on the 10s, 5% on the 30s. Bessent, Trump, they've all said that when the yields cross those thresholds, they get a little, yippy. So I think we can actually trade around them still as a potential floor, as Tom said. What are your thoughts?
I said yesterday that I thought the bond puts were a better sale than sale of equity puts. And obviously the bonds have not rallied as much as the equity puts have. I just thought on a relative basis they were an easier sale. So I would agree and still stand that way, although the market has acted a lot better than bonds have with this movement back.
You got to admit, with the SPOO's up 72 today on the heels of
a nice rally into the close yesterday, too, of about 50 handles too.
Yeah, I agree with you. There's some strength. I think we also saw yesterday it was a weird down day. Sellers got kind of exhausted.
Volume was extremely light.
Volume was really light.
It was worrisome to me.
Yeah. I felt like on the close last night, I was a little nervous. You know what's weird? Remember how you said yesterday, if it was an up day, Netflix would have been up $100. Right. Did you see Netflix today?
No, I haven't looked at it.
Take a look.
What's it up like $8?
No.
Up 60. Unbelievable.
See, that's what I thought yesterday. I was like, if it was an update, Netflix would be up 100, and it's up 60 today. So it's just
yesterday it was only up 20 or something.
No, like 8 or something. I think. Whatever, but whatever. It doesn't matter. My point here is that there's definitely a lot of cash on the sidelines now. There's a lot of buyers waiting in the wings, both in the U.S. and globally. But again, there's been no signs. I think here. I just think that there's, for the first time in a long time, I'm a pot odds player. And for the first time in a long time, Chris, the risks in the market are to the upside, not to the downside. I know that's going to sound weird to so many people because we've sold off so hard and everybody thinks we're on the verge of crashing and all this kind of stuff. And I kind of sense that this is the first time fear has swung in that direction. So I feel like the risk is kind of to the upside. I mean, I'm not short. Let's put it that way.
Mm-hmm.
But he's never short before the market goes down, so be careful.
What?
It was 3 days early.
Oh, right, 3 days early. I find it interesting in this market, a name like Netflix is holding up, but you're seeing a lot of, maybe that's kind of a consumer staple for the modern era. If people are going to be going out into the world less, traveling less, hotel bookings are going down, as we see. Airfares are going down, car rentals are going down. Forward-looking expectations for the summer rate are cratering in that regard. People probably just stay at home and stream. So Coca-Cola, Pepsi. I mean, we've been talking about this a lot on Overtime, that if you're looking to what sectors are typically the most resilient if you're heading into an economic slowdown, it's going to be the staples. And you look at the staples name, like Coca-Cola is pressing up towards its yearly high. Philip Morris is pressing up towards its yearly high. And a name like Netflix, I think, is a modern staple. It's now pressing up towards its all-time high right now. So on dips in those kind of names, you probably have a little bit more confidence in selling puts than you would in a name like NVIDIA right now, which is in the thrall of course, the tariffs. But Tony,
I
we used to have
I don't know if I agree with that. I don't think it matters. I think this has been a market that you can more or less throw a dart. And, I agree that
you've had a little bit of intestinal fortitude. You could be right on both sides of this market.
Yeah, and I also don't think I don't think you got rewarded for being I really don't think you got rewarded at all in this market for being like a stock picker. I just don't think there's been any reward for that. I think this has been a market that's essentially, doesn't matter. You could have thrown a dart yesterday at anything. I'm not saying you should have bought Netflix, but you could have thrown a dart at anything.
It was a hard hole too, though, Sosnoff. I mean, we were down 180 handles on many S&Ps. I mean,
oh no, I know.
If you did it down 40 or 50, thinking that
I covered on the opening.
We had a $150 expected move for the week. We've moved 180 to the downside. We're actually moving 180 to the upside now. I mean, volatility has been understated, even though it's trading 27, down 4% right now.
Yeah, I'm not disagreeing with you. I'm not disagreeing at all. We've been very focused on maintaining our long, not getting too short here. That's for sure. All right, what else, Chris? What else do you think?
In terms of the Tesla earnings that are due out later this afternoon, right after the closing bell, that and Google are probably the big ones for the rest of this week in terms of what's remaining on the board for what biggest market cap, as it were. More tech next week. I can't help but think that most of the bad news is priced into Tesla. Obviously, public sentiment is really bad. You have people who are selling their cars, who are, sawing off the Tesla logos. We've seen all the delivery numbers drop, yada, yada, yada. There's still a really compelling case that maybe the floor is in around 215, 210 or so, the lows that you had prior to the election, lows that we've carved out thus far this year. I can't help but think that you have to be looking to the upside right now if you're leading into Tesla earnings heading into later today.
I think that's pretty much exactly the way we discussed it. I talked before you came on. I said, because I'm playing Tesla right now, and the first thing I said is, I think the numbers are going to be horrible. I think the stock's going to be up small. I can't picture them. I think it's an inside move. I think they're going to try to spin. I think they've been working now for a couple of months on spinning this story, because it's obviously they're not rookies. This is not their first rodeo. This is not their first earnings.
No.
And they're going to spin a really good story. The numbers are going to be a disaster. But I got a feeling it's just priced in. I mean, everybody follows this. It's too heavily traded. It's too aggressively traded. I just don't think that there's going to be any kind of crazy surprises in there.
Tesla up 10,950 right now.
Yeah,
there probably going to be some supply chain concerns and some warnings about that. They've already had to delay, their lower cost vehicle they wanted to bring into the U.S. But again, this is all public. So what don't we know? And if Musk is going to be leaving Doge in the next month or so because it's the end of his special employment window, then you have the scenario that Tesla stockholders really want and need, which is Musk's full attention back at the company, not in DC.
Well, his full attention is never going to be back at the company because he's changed his life. I mean, his life has changed and he's a different person now. And he's got, he's going to be off. He's going to be off and going lots of different directions with all different businesses he has. And he's got to fight off these Chinese competitors now who have some pretty slick cars out there. I mean, there's a lot more, there's a lot more challenges than there used to be.
The whole industry is a lot more mature than it
was
when he
right.
first came along.
The cars that are coming out now, they're pretty cool. And let's face it, one thing about Tesla, and as being an ex-Tesla owner of 2 times, that car hasn't changed since 2015. It's the same damn car, and everybody else has got like even in the Lucid I have now, the tools are way cooler than in Tesla. So they need to up their game. They're way behind now.
Well, they upped it with the Cybertruck. It just wasn't a good.
The Cybertruck,
good fit.
I think the Cybertruck's a failure.
Yeah, it wasn't a good fit.
It's a failure.
100%.
Nobody wants to drive a Cybertruck. Those are that they're going to shut down.